Hi traders, it's Roberto here. Today is Monday, October the 6th, and we have a few decent setups on the daily chart, and I'll go over them right now. The first one is the Euro USD, and looks like we have a nice morning star. We have confirmation, stochastics indicator is oversold. Price is above, this is a weekly pivot point. This is a central pivot point. When price is above it, markets tend to rally. When price is below the central weekly pivot point, then the markets continue to head south. Just to give you an example, I'm going to put up all the pivot points for the past few months. Notice when price is trading below the central pivot point, weekly, not a daily pivot point, price continues to sell off. But look what happened. Price looks like it's going to close above the central pivot point. And also it's closing above the trigger line, which is that 8 moving average line we have been using. And stochastics indicator is also oversold, and it looks like we may have a bit of a divergence right here. So we draw a line from this swing point to that swing point and match it up with the swing lows on a daily chart. We have a divergence set up. So we need for this candle to close. Now, I would wait for a retracement before taking this trade. So a good thing to do is take your Fibonacci tool and draw it from the bottom of that daily candle to the top. This daily candle is going to close in about an hour. So we have, ideally, we would like to see the market come back to a 38 to 50% retracement level, which is about 125.90, 125.80 area. So that's about here. Let's see what that looks like on a 4-hour chart. Okay, so here's the swing low, swing high. Here's the retracements. We'd like to see the market come back down to these levels to enter a buy signal with our stop loss 10 pips below the swing low. Let's look at some other trade setups. Here's another trade setup on Australian dollar. Again, notice that the central pivot point, price below the central pivot point, the weekly central pivot point market continued to sell off, but now we have a nice turnaround, a potential morning star with price above the central pivot point. And again, we want to wait for the market to retrace, take a trade, stop loss below the swing low. Stochastics is oversold, so we're going to be looking to enter a trade on this pair. So far we have the Euro USD and Aussie dollar. Now on USD yen, I jumped a gun. I sent a signal to buy because of this bullish engulfing candle, but the market just gave everything back. So we're looking at a potential evening star, previous resistance, and price came back down at least 75% of this candle. That's what we need. We need the market to come back down and give back all the gains. We have an indecision candle in the middle, so we're going to wait and see how this plays out. Price needs to stay below the 8 moving average line. So this one I'm going to hold off on. Aussie dollar and Euro dollar look pretty good so far. Let's look at USD Swiss, which is the opposite correlated pair of the Euro USD. So it has not broken the 8 moving average line, but it is below the weekly central pivot point, and that's what we're looking for. We're looking for price to close below the weekly central pivot point. We need a candlestick pattern that indicates a reversal or retracement, and stochastics needs to be overbought, and it is, and it looks like we may have a divergence on this pair as well. The USD Canadian looks very convincing. We have a nice evening star, and this candle most likely will close unless in the next hour it turns around and heads north. Price below the central pivot point. It's closing below the 8 moving average line, which we'd like to see, and we also have divergence and overbought conditions on stochastics indicator. So I'm going to be sending out signals, but I wanted to give everyone a heads up as to what I see. Let me see if I can find some examples of head and shoulder patterns, which this is a head and shoulder, or rather not a head and shoulder pattern, but I was looking at evening and morning stars. This is considered an evening morning star. It's different when we have 2 candles down, 2 candles up. This 4 candle formation is a reversal. Stochastics oversold the market for, look how many weeks, about 6 or 7 weeks it continued to go up before it turned around and went the other way. Okay. I thought I saw a few head and shoulder patterns on a daily chart on this pair, but I guess I didn't. Maybe it was the euro dollar. Let's look at some other pair. Okay, there's a morning star. Stochastics oversold. Here it is. And we have one red candle, an indecision candle, and a bullish candle closing above the central pivot point, a weekly central pivot point. The market, notice that the market retrace, and this is very common that market will come back and retrace to about a 50% retracement level. That would be the entry with a stop loss below here. So that's essentially what we're seeing right now. On this pair, on the USD Canadian, the market has, sorry, let me just push this a little bit further. Here we go. We have 3 candle pattern, gave back all the gains. So, but we don't want to be taking a trade down at this level because it's so oversold on the smaller time frame. So we would like to see the market to go back up to around 50% retracement level to sell, and then put your stop loss above the swing high. And the target would normally be a fib retracement. So I take my Fibonacci tool and I draw from swing low to swing high. This 161% retracement level is the first target, and then there's 261, which is down here. So that's how I calculate targets using a Fibonacci tool. So that's it for the short tutorial. I probably will not send a signal till the daily candle closes, and even then I'm going to recommend everyone just wait for retracements before you take a trade. So have a good trading week, and see you guys next time.